Today, Friday the 21st of August 2026, silver is pressing towards $70 an ounce, trading above $69 and reaching its strongest level in 2 months. It has climbed more than 7% this week alone. The immediate catalyst is clear. The US dollar is sliding and Treasury yields are falling after the Treasury announced support for longer-dated bonds. Since silver is priced in dollars, a weaker dollar makes the metal cheaper for overseas buyers and tends to lift prices. But this goes beyond currency mechanics. Silver has gained roughly 13% in a month and more than 70% year-on-year, which tells you that investors are treating it as a serious store of value, not just an industrial input. The shift accelerated after the US Treasury moved to support longer-dated bonds. In practice, that means the government is stepping in to buy its own longer maturity debt, which pushes bond prices up and yields down. Lower yields reduce the opportunity cost of holding silver, because silver pays no interest. That logic has powered gold higher as well, with gold climbing over 2% in the same move. It is worth remembering that silver fell over 3% to $64 just a few days earlier, on the 18th of August. So this week's rally is a sharp reversal, not a slow grind. Key levels have already been marked out. Analysts see $70 as the main resistance, with $65.80 as first support and $63.20 as the critical floor. Right now, the impact splits across markets. Silver miners and holders of silver ETFs benefit directly from higher prices, while manufacturers that use silver in solar panels, electronics, and medical devices face rising input costs. For ordinary investors, the message is more nuanced. When the US Treasury tries to cap long-term yields, it raises questions about the dollar's future purchasing power. That is why silver's monetary demand is rising at the same time as its industrial demand stays firm. In other words, this is not a one-sided commodity squeeze. It is a broad vote of no confidence in the dollar, mixed with real physical demand. The result is a metal that is climbing a wall of worry rather than moving in a straight line. The next move depends on whether silver can hold above $69 and break the $70 barrier. If it does, several analysts see a clear path towards $84. If it fails, the first support sits at $65.80, followed by $63.20. The bullish case stays intact only while silver remains above $60. The main risk is the bond market. A breakout in yields above 5% could strengthen the dollar and cap this rally quickly. Because today is Friday, the weekly close matters. A close near the highs would reinforce momentum into next week. A rejection at 70 could trigger profit-taking after a 7% weekly gain. So the real story today is not simply a number on a screen. Silver's push towards $70 is a live verdict on US Treasury policy and the dollar. Lower yields, a weaker currency and rising metal prices are all part of the same trade. Watch $70 for the breakout, $65.80 for the pullback, and the 5% yield threshold for the reversal risk. The next few sessions will decide whether 70 becomes a floor or a ceiling. For now, the momentum is clearly with silver, but round numbers like 70 often bring a fight. That is the level to watch.